We're going to kick things off, though, with Target missing the mark. A once red-hot retailer posting its worst day since November 2018 after it reported sluggish sales of electronics and toys during the holiday season. Target, which had been a big bright spot not only for the sector but for the market in general, joins fellow retailers like Kohl's, JCPenney, Five Below, and L Brands, which all failed to meet holiday expectations. The XRT, the ETF that tracks the group, down more than 1% to kick off the year. Guy Adami.
Yes, sir.
Are these just one-off misses, or do you think there are some cracks in the consumer beginning to show?
No, I don't think it's an indictment on the consumer at all. I mean, I think that in this case, they're one-off misses. We can have a consumer conversation, but I don't think it's about Target. Look, the stock went from 80 to 130, effectively in a straight line, and finally valuation started to catch up to Walmart. Yes, comps were disappointing. You can't come out here and say they were not. However, they reiterated fourth quarter guidance, and they said margins are going to be better. So stock down 6% or 6.5% off this. I don't think it's a disaster at all. You don't need to go buy it tomorrow. But I got to tell you something. Given the run it's had, I didn't think today was all that bad, quite frankly.
Okay, Karen, what about you? You've owned it. Obviously, today not the day you want. You buying more on the weakness?
I'm going to buy more. I didn't buy more today. Usually I like to let it just settle in a little bit. I mean, I was definitely disappointed. And the thing, Guy said they'll still make their earnings, which just tells you they were going to beat if they had come in where they thought on comp store sales. They would have beaten that number by a lot. The street was already expecting a beat. And so for them to say, we'll be within our guidance, that was disappointing. To what Guy said, the margins were very good, so they sold more of the stuff that has better margins, less of the stuff that didn't.
Did the street overreact?
I think a little bit, not a ton. I mean, it lost 1.5 multiples. It wasn't at a crazy multiple before. So I do think it's attractive. I want to let it settle in a little bit. I will buy more. I think it's an opportunity. I think they're very different than those other retailers, the JCPenney's, the Kohl's of the world. They're getting it right.
It's been the sweetheart, right? So that's why it's outperformed. It is oversold, but to Karen's point, 3-day rule, let it simmer a little bit, see where it adjusts, see where it levels off, wait for it to hold the low for that first day, and then wait a couple of days after that. I don't know. I mean, Walmart, Best Buy, maybe you take the weakness as an opportunity to buy those two names if they sell off into earnings.
We have seen the ones that have been retailers bounce back, though, Steve. I think Five Below, got crushed.
Yeah, we've seen the ones that, but
this has been one-day bounce.
But this has been such a favorite that this might have to wait a little bit longer because there was so much money in it already. Those other names you're talking about, there was new money being put to work on a discount. There's a lot of money already in Target.
Yeah, we look at things from a macro perspective. I would say that, Target, there's a lot they've done to reposition themselves within the retail space amid all the disruption. But I think there are, I'll take the other side of what Guy was saying. I think there are things to watch in the consumer space. I mean, if you think about it, what drives consumption? First of all, let's just look at the consumption number. Consumption, if you just look at the GDP prints, that peaked in 2018. In the summer of 2018, it's been slowing. Retail sales has been slowing. These things are decelerating. They're not falling off a cliff, but people need to take note that things are slowing. And what's going to drive the next leg forward? Do you have a job? Well, jobs growth in the U.S., we just got the payroll print that people liked, but jobs growth, people don't realize, is the slowest since 2011, since the recovery. And, by the way, they're working less hours.
But are jobs growing at a slower pace, Dan, because the economy's slowing or because we're running out of people if there's nobody that needs a job or can get a job, then you can't have growth?
It's certainly a little bit of both. I mean, we just got the Beige Book out today that said there are a lot of labor shortages, but if you look at job openings, which comes from the JOLT survey.
The JOLT. I think that's a better indicator than the monthly jobs.
With a lag, but yes. But it's actually, it's come back a little bit, but it's rolled over too. So jobs are slowing. And if you look at the other drivers, credit, access to credit, because if you don't have a job, maybe you're going to borrow, pay on a credit card. Your banks are actually tightening modestly their lending standards. So put all these things together along with the overall trend, I think you got to keep an eye on it.
And here's where I'll agree with Dan, who disagreed with me. I agree. I mean, I think people confuse, and I've said this for a long time. I'm not suggesting I'm right. It's just my opinion that people confuse the health of the consumer with their ability or want to spend. The U.S. consumer will always spend. We've learned that over the years. Doesn't mean they should be spending. And when you have an economy that's 73% driven by the consumer, and as long as consumer confidence stays at these levels with the stock market at all-time highs, people will spend. I think there's
problem is you're in a sweet spot. You're in a. I shouldn't say the problem is. The good thing is we're in a sweet spot. So to Brian's point, unemployment is at record lows, or right there, right around record lows. So enough people have a job to keep the economy afloat. and there's not a lot of headwinds. Now, if the market sells off, people will equate their richness or their wealthiness, if you will, with where the stock market is. So if that comes in hard, then you have a problem with what people perceive as their wealth.
Agree 100%. And quickly, you saw that in October, November of last year when the market went down basically 19.5% in the course of a month and a half. Consumer spending stopped on a dime. And that's not coincidental. People look up and say, oh, wait a second, what's going on? Maybe I shouldn't be going on vacation, and maybe I shouldn't be buying that Starbucks coffee. So it is extraordinarily sensitive, in my opinion, to the stock market.
And when we talk about the consumer, again, we come back to this theme. We've talked about it a lot across the network. You got to know what you own. I know we talked about the XRT at the top. Here's my beef with the XRT. I'm going to give you guys a quiz. Are you ready? Do you know what the highest percentage weighted stock in the XRT is? Anybody gets this, I will buy them dinner. Rite Aid.
Yeah.
It's Rite Aid, followed by Grubhub and
Yeah,
Children's Place.
But the problem
Think
is
about that.
they're all
but
such
they're all
small.
They're all
holdings.
small.
They're all
I understand
1%,
that.
Rite Aid's
So if you
2%.
say I want to go to the RTH, which is another one,
Right.
Amazon and Home Depot, two stocks are 30%. The lesson is if you're going to bet on the consumer through an ETF, know what you own. Know what's in there. Know what stocks
Well,
matter.
maybe that's another lesson if you want to take this out further, is that if you like 5 or 6 companies, then buy 5 or 6 companies, make your own ETF instead of buying something else, because a lot of these names only have a very small percentage of those underlying
That's my
holdings.
point, Karen. If, let's say, you own the RTH, right, and Home Depot misses, that's 10% of the, all of a sudden you're like, well, the rest of the stocks did well, but yeah, if your heaviest weighted stock doesn't do well, so individual names. Target, who else might you like?
Well, Walmart also, right?
Heard of them.
I don't own Amazon. It's come in a fair amount, but it'd have to come in a lot more before I would own that. But, I like to pick a few and think that I can outperform the 100 mix of, 1% each in the XRT. Hopefully, I can. Today, no, definitely not.
Yeah, but you've
Being
made a
long
lot of money in Target. Target's well
Target's
above, I'm
work.
sure, your dollar
Yes.
average, right? I mean, it's got to be.
Definitely. But I think there's upside from here, but I will let it settle in a little bit.
Let it settle in again a little bit. But cracks in the consumer, something to watch. All this data, folks, we talk about on CNBC, ISM manufacturing, your eyes can roll back. It's important because we're right at a key time for the economy and the market.